What's up, YouTube? Isaac Straight here with an update on a stock you need to consider adding to your watch list immediately or buying. And I mean, it's all on you. Shoot. So this stock I'm talking about today is Genworth, ticker symbol GNW. I currently do have a position in this one, just so you guys know. Let me pull up my Robinhood real quick. It's a pretty good day today in the on the Robinhood account. Okay. Yes, I am only 241 shares at an average cost of 371. I trimmed it back a little bit. I was at 500, but I was like, you know what? I need to take a little bit because that's what we do here. Okay, so let me read something that I found. Just so you guys know, I use Seeking Alpha Pro. It's very expensive, but it's very useful. So I'm gonna read this article I found, you guys. It's Genworth's planned U.S. mortgage insurance IPO evaluates liquidity concerns that the company's holding company and will unlock value for its shareholders. All right, so Genworth's planned U.S. mortgage insurance IPO evaluates liquidity concerns at the company's holding company and will unlock value for its shareholders. A market comp of Genworth's U.S. mortgage insurance peers implies it is a good time to take the company's subsidiary to market. The plan is expected to be accretive to Genworth's share price, and shareholders could potentially see share value increase north of 60% in the next 12 months. And usually they're a little shy on their estimates. We're going to say that one's like 80%, okay? Maybe not 75. Let's be a little conservative on this one, okay? For the longest time, Genworth's finances, ticker GNW, has battled to shore up deficiencies at its life insurance subsidiaries and reduce the amount of debt held at Genworth Holding Inc. Since 2016, the approach to evaluate both concerns and unlock shareholders' value was to sell the entire company to China Oceanwide Holding Group for a sum of $5.43 per share in cash. But more than 4 years later, that deal has yet to consummate. And for all intents and purposes, it is not expected to close. The China Oceanwide transaction has been extended indefinitely in order to give the acquirer time to secure financing. However, Genworth can walk away at any time without penalty. That's pretty good. I mean, as long as anytime you can walk away without getting nailed, I mean, that's a win in my book. Before we go any further, don't forget this is a financial advice in any which way. This is my personal opinion on said stocks. Always do your own always do your own research or consult with a professional before you buy or sell any asset. And don't forget to subscribe to my channel and give me a thumbs up. It helps out the algorithm mess. Despite its magnificent failure to close the transaction, Genworth has a backup plan to unlock value for its shareholders. Unfortunately, it has been implementing the plan in earnest since 2019. It includes selling off or floating parts of its mortgage insurance portfolio and using the proceeds to par down holdco debt. To this end, Genworth has raised nearly $2.1 billion since late 2019 through asset sales and has further plans to float a portion of its U.S. mortgage insurance between USMI sometime in 2021. It is important to note Genworth also has a plan for stabilizing its life insurance subsidiary through a multi-year long-term care insurance enforce rate action plan. This article, however, does not explicitly analyzing the portional impact of the plan on Genworth's future operation. Unfortunately, the plan is yet to yield demonstrable results in the form of a raising stock price. This is partly, however, because the stock price has been clouded for the last several years by the defunct merger with the China Oceanwide, which, I mean, that's, it's kind of, what do you expect, right? Nonetheless, the prudent use of cash from past asset sales, along with using the proceeds from its upcoming IPO and cash on hand to aggressively reduce Holdco's debt and priming Genworth's equity for meaningfully rise in the coming months. Upon executing the proposed IPO, Genworth should have ample liquidity to settle 2021 as well as 2022 debt obligations and oh wow. Okay, cash revenues for the debt servicing thereafter. All these things bond well for Genworth's common stock, and assuming conditions continue to improve, the company's market value is ripe to raise more than 60% over the next, which I said 75, percent. These guys are full of it sometimes. The main obstacle facing Genworth in the near term is looming debt. Yeah, I can see that looking at their financial debt spread snapshot they got here real quick. Let me show you guys. All right, so this is that one, and then I wanted to show you this IPO one we got here. This doesn't look too. In February, Genworth retired all 338 million of its February 2021 unsecured notes with cash on hand. Then, in March, Genworth sold the remaining 52% equity stake it owned in Genworth Mortgage Insurance Australia Limited for a sum of 370 million. Genworth used 247 million of its proceeds towards paying down its AXA settlement. All right, and kept the remaining 123 million to cushion its cash revenues. With these payments made, Genworth removed 583 million in debt from Holdco's balance sheet. Wow, that's awesome. That's good. That's good. Very, very nice. This is more reason why you guys should think about watching this one. I'm already in on this one, baby. Values of U.S. Okay, recovered. On average, mortgage insurance are trading at 9.3 times TTM EBITDA at 4.5x forward sales. These multipliers have dramatically improved since last July, when mortgage insurance was trading at only 4.7 TTM EBITDA. Okay. Genworth's valuation following USMI IPO. Okay, so they're giving it a valuation of only 19.9% USMI to retain the remaining 18.1% stake. Eventually, more management could spin off that remaining stake to Genworth shareholders tax-free, but there's very slight chance of that occurring in the next 18 months. Like, this is going to be a long-term play right here. This is going to be one you want to put away. Just forget about it. Okay, so they said if USMI receives 4.5 billion enterprise value when it IPOs base case, then Genworth's 80% equity stake would be worth roughly $3 billion. The proceeds from the 19.9% sale would provide Genworth with approximately $743 million, which could be put towards paring down Holdco's debt, currently sitting at $1.8 billion net debt. Debt minus cash, this would leave Genworth with $1.9 billion in residual value from its ownership stake. That's not bad. That's pretty good. Okay. All right. So let's end this with, Genworth's plan is on track. Okay. That's what I believe. I think they're going to be very good, and they're going to have any questions of liquidity concerns for the company. They're going to be out of the picture here pretty soon. So, don't miss out on it. And don't miss out on my next update on Genworth. Just, don't forget to subscribe. Bring my bell on your way out, baby. Share it with somebody. Let's make some money. I'm out.